Today's World Insight. China sees a rise in its consumer price index. How can China avoid inflation that is impacting other parts of the world? Here is our host, Tian Wei.
Hello, I'm Tian Wei, and welcome to World Insight, coming to you live from Beijing. We begin with taking a closer look at China's economy. The National Bureau of Statistics says that China's Consumer Price Index, or CPI, rose 2.1% year-on-year in April and 0.4% from March. Meanwhile, the Producer Price Index, which measures the cost of goods at the factory gate, was up 8% from a year ago and up 0.6% from March figure. Some say the rising cost in consumer goods is partly due to the domestic resurgence of COVID-19 and the continuous rise of bulk commodity prices across the globe. On the other hand, China still managed a GDP growth of 2.3% and 8.1% in the years 2020 and 2021 respectively, despite the global pandemic and geopolitical risks. China's central bank said it would step up support for the real economy while closely watching domestic inflation and monetary policy adjustments in developed economies. So what is going to be the realities of the Chinese economy? How is China going to juggle many tasks all at the same time? For deeper insights, let's loop in our panelists. For more on the Chinese economy, let's loop in our guests. In Shanghai, Wang Dan, Chief Economist of Hang Seng Bank China. In Shenzhen, Xiao Geng, Director from the Institute of Policy and Practice with Shenzhen's Finance Institute from the Chinese University of Hong Kong in Shenzhen. And in Beijing, Michael Powers, Zurich Insurance Group Chair Professor with the Department of Finance from Tsinghua University. Ladies and gentlemen, welcome to the program. The numbers already well known all over the world, yet how should we put out our analysis to you, Professor Powers, when you are teaching your students while at the same time watching closely the realities of the Chinese economy? What do you see the numbers, among the numbers coming out?
With regard to the recent inflation numbers, I don't think that should be tremendous concern. I think that especially in the context of all that's going on in the world with the crisis in Ukraine and also with the ongoing problems related to the COVID pandemic, I think that we can recognize that there are a number of issues both on the supply and demand side of economies. On the demand side, for the most part, it tends to be withheld because people are restricted under lockdowns and so forth in certain areas. And on the supply chain, on the supply side, there are of course international supply chain issues, and both of these things will affect pricing. But with regard to the latest figures, what we're seeing is very modest inflation. Certainly in line with government forecasts for this year. Yeah. The current figure, 2.1%. I think the government is looking at 3% overall. So I don't think that this is something that is too much out of line with expectation.
Talking about the inflation, of course, now we see, because of the pandemic and also the crisis elsewhere in the world, having a big impact on the inflation numbers. But the question really is, how is China going to juggle among the different tasks? One is to fight against the pandemic. The other, of course, is to maintain the economic growth, while at the same time trying to function like the economy function normally. That is, at least according to the words by the vice chair of the finance committee with the Chinese Central Authority. So tell me more about how do you see China is gradually doing that?
Well, I think we could begin with inflation. I just mentioned that the current rate, the latest figures are fairly modest. One could compare that to, for example, what's going on in the United States, where we have We have rates of inflation in excess of 8%, calling, to mind bad memories from the past. China, to a large extent, has been protected from this. By the way, there's also a substantially larger inflation in Europe than there is in China at the moment. And I think China has been protected from this primarily because of because of a couple of things. One is because there has been some restriction in consumer demand. But at the same time, another major part is that the central government has played an important role in protecting the economy from so-called imported inflation. So when the prices are going up in these other countries in North America or Europe, prices would also, the imports into China would also tend to rise. But the central government is able to modify that to some extent by tapping into commodity reserves and taking other actions to discourage producers from passing on all of those price increases to consumers at the same time. Of course, eventually,
but is that sustainable? But is that sustainable, Professor?
Well, it's something that it's really a smoothing issue, and I think it's a very important one. I suspect that, but I suspect that on the inflation side is not the biggest concern in China, at least at the moment. I think that probably the cooling of the economy, the impact of the ongoing issues related to the pandemic, the inability to bring products into the country, to export them, bottlenecks, and so forth. I think those things are a bigger issue. They have an impact on society at large, and in particular, one to be concerned about is unemployment.
I see. There are so many questions. We cannot go all of them at the same time, but let me ask if we talk about the imports and the inflation. Ms. Wang, I understand now you can hear me and you can see me as well. Thank you so much for once again joining us and your patience. But tell me about that. The Shanghai port volume down about 20%, and yet China has been very vigorously talking about juggling the different tasks all at the same time. How do you see gradually the policy rolling out?
Well, because Shanghai port is so important in China's container shipping, it has affected the export-import figure in April greatly. But there are a lot of flexibility in China's system. So overall, we didn't see the kind of catastrophic result for China's industrial productivity or for consumption. The major weakness in consumption is still from the COVID control. So now the government is trying to help the small producers with their finances and trying to help those industrial factories to get back on their normal schedule. This must be based on a precondition that largely the COVID control has to be lifted in most of the industrial cities. And I think that's going to be very difficult within the coming month.
Are you seeing, for example, with the experience in Shanghai, of course, the Shanghai at this moment is the worst hit among all the provinces, municipalities in China. From the experiences of Shanghai, how people try to at least grapple with the tasks of, on the one hand, fighting against the pandemic, on the other hand, make sure crucial sectors are being taken care of, Ms. Wang?
Well, one way to cope with it for China as a whole is to leverage on its regional disparity, because most of the places being affected are along the East Coast, but central and western China are largely intact. When we look at the economy in central cities like Wuhan and Changsha, they're not really affected. Factories are running as normal. Their transportation would be affected for sure because there's a lack of truck drivers. Overall, I think China would have a difficult time for the East Coast since it's the manufacturing center. And also some of the critical services will be missing. Because in many cases, the factories are outside of Shanghai, but their headquarters are in Shanghai, handling contracts and payments. If you cannot have the finance department processing payment, even if you have a factory running just as normal, you can really proceed with the production activities.
Recently, Professor Xiao, we have seen some of the metropolitan cities, the biggest ones, are being hit. For example, Shanghai, Beijing, Shenzhen, just to name a few. Earlier, there was also Guangzhou and some of the others. So how do you see, the characteristic of this time's fight against the pandemic compared to 2020, 2021? Very different picture. So what does that mean for the gradually, rolling out policies? What do financial decision makers need to think about at this moment?
Well, I think this time Shenzhen is actually a good example. It was hit very hard, but it responded very quickly. And now Shenzhen, and I would also say Guangdong, is actually recovering pretty well in terms of production and also ordinary life for most people. I think because Shanghai is so important in the national economy, and because of the concerns about Shanghai, other cities. I mean, the other cities actually are overreacting to the pandemic control, and that unnecessarily complicates the production. So that's why the numbers are not very good. But I think also after this pandemic, which personally I think will be under control pretty soon, because we already have so many months of experience. Based on Shenzhen and Guangdong's experience, the production will recover pretty quickly. But even that does not mean that China does not will be growing very fast, because the economy has been slowing down even before the pandemics. And also, the low inflation in China actually indicates, the lack of really necessary stimulations.
Yeah.
It's compared to the other countries. So that's why I think we actually need more policy stimulus.
Professor Powers, according to the latest press conference given by China's finance policy decision makers, quote, sufficient space and also abundance of tools, that's being mentioned, but without giving specifics. What do you think are some of the policy directions and tools that can be utilized gradually?
I think that the country is in a fairly good position in terms of the ability of the central government to take action. We were talking about inflation just a moment ago. The fact that inflation is somewhat modest at this moment means that the central government has monetary tools. It can, for example, allow banks to be a little bit looser in lending. And they can do that in addition to fiscal stimulus, which of course probably will be the major part of trying to keep the economy from cooling too much during this pandemic period. I think really the key issue is how long these problems last, the COVID-related problems. Because it's very clear that things will recover, both because of pent-up consumer demand and because of government stimulus, once lockdowns can be disbanded. But how long that process will take, I think, is very crucial.
That's an interesting question. Ms. Wang, your thoughts?
Well, COVID control, I'm afraid, will be a relatively long-term preparation. We cannot see an end of this COVID virus within 1 quarter. So most of the industries have to prepare for the long haul. And one thing I think is very critical is their liquidity. And now we have seen a lot of the businesses slowly running out of liquidity with this prolonged COVID control. For self-employed and small producers, this is quite devastating. And if in the best case scenario, in the second half of the year, China does have COVID under control, then for restoring consumer confidence, it might take a while because the income growth has slowed. So if consumers don't spend fast enough, that cannot provide enough income for those sellers and small businesses in the services sector, then that can be translated into a slower recovery in China's growth.
Just to make things even more complicated, things are also changing in the rest of the world. You're watching World Insight with me, Tian Wei. As the U.S. inflation hovers near a 40% high, President Joe Biden on Tuesday said the administration is discussing whether to drop the additional tariffs on Chinese imports imposed during the Trump administration. Last week, the Federal Reserve announced its biggest interest rate increase in more than 2 decades as it toughens its fight against the fast rising prices. The Federal Reserve said it was lifting its benchmark interest rate by half a percentage point to a range of 0.75% to 1% after a smaller rise in March. So, how would the U.S. ending tariffs on the Chinese imports impact both inflation in the U.S. and also the Chinese economy? And what does this mean, the Federal Reserve move possibly for both the U.S. and the global economy, certainly China's economy included? With us once again, Wang Dan, Xiao Geng, and Michael Powers. Professor Powers, go to you first. Any move of Federal Reserve will certainly cause a lot of attention around the world. Earlier, we see the stock market in the U.S. and the bond market are doing dramatically, shall I put it that word. How do you see the latest policy possibility related to that short-term phenomenon and related to the longer-term strategic thinking from the Federal Reserve?
First, I would say that I try very hard not to focus on the stock market as a measure of the economy, whether it's in the United States, China, or elsewhere. The stock market goes up and down. Most of the investors in the United States, anyway, are very sophisticated individuals and funds. Whether the prices are high or low, it certainly means something, but it is not. It probably is not the ultimate measure or objective that's used by government officials. So I think that controlling inflation is definitely a priority for the Biden administration. I think the Federal Reserve has been very slow to take action, but I do think it's good that it has taken action and it continues to take action. With regard to the tariffs, this would certainly be a win-win. People have been talking about this actually since the beginning of the Biden administration, and when the first current concerns about inflation began to arise, that one thing that could be done would be to remove some of these tariffs. But the problem with that is largely political.
Yeah.
And even if there is a willingness on the part of the Biden administration to take action, it's going to be somewhat a slow-moving process. And I would think that at least in the short run, this year, that is, that it would have a very modest, if any, impact on inflation.
Right. We still have to handle questions one by one about the Federal Reserve, a possible decision. Professor Xiao, your take.
Well, I think China's exports on the consumer products helps a lot in controlling consumer index inflation in the U.S. for the ordinary people. The inflation in the U.S., a lot of inflation are in housing and other areas, energy. So I think eliminating the tariff definitely will help the low-income people in the United States. I think politically, it's actually good, for the U.S. to recognize that. But the problem is that China is facing with the supply, the exporting problem because of the production due to the pandemic. So I think those countries should really work together, trying to get get away from the kind of geopolitical debates, trying to focus on helping the economy together.
It seems that both of you want to hide away a little bit from the Federal Reserve possible decision. Let me go to you, Ms. Wang, to see whether the lady could handle that question. Go ahead.
I think U.S. inflation is more or less stabilized in recent months, and that means the Federal Reserve may not hike the interest rate as aggressive nearly as what the market had anticipated. The labor market in the U.S. has been doing quite well, and we can see that in the coming month, the wage inflation in the U.S. will be very high. Goods inflation will probably go down because as the COVID restrictions being lifted, people would consume more services rather than goods. So I actually have fairly high confidence in the U.S. economy this year. It might not go overheated as what we're seeing now, but the Federal Reserve hiking interest will certainly not drag it into a prolonged recession.
Let me also ask the question directly about the possible tariffs move by the U.S. Of course, it's both political and also about the U.S. Own inflation problems. Now, Ms. Wang, go to you once again. That is a very interesting topic, isn't it? So how do you see if the action were being taken by the U.S. side, how much impact will it have really on China's exports to the United States? How much of that is more about creating an ambience or possibly creating an ambience for the two countries to be able to interact more friendly with one another?
I think it's more of a friendly political signal in a way. Because by lifting the tariffs at this point, it won't help China's exports by much. And it will send more of a political signal to domestic consumers that the Biden government is doing something to lower the inflation, to alleviate the pressure. But for China, this won't change the current trend that many of the foreign buyers trying to diverse their suppliers away from China somewhat. Many of those buyers will want to put some of their sources to ASEAN countries like Laos, Vietnam, or even India. That's why those economies are booming in terms of their fabric manufacturing or toy making. So for China, this is not going to make a significant difference for its manufacturing.
Professor Powers, of course, the supply chain discussion has been going on for quite some time, some on the surface of the water, some under the water. Now, how do you see the quicken up pace of those discussions around the world? And also related to the U.S. government's possible decision on the tariffs?
Well, I think that that's a very important component of the discussion of the tariffs. I think that we've seen as a result of the trade tensions and the trade war, the COVID pandemic, the invasion of Ukraine, there is tremendous disruption. And whatever governments can do to try to smooth things out, they really should do. It's in the interest of all of their economies. However, as I said just a moment ago, it's extremely political. And especially in the United States with the domestic politics that's involved, if President Biden were to take steps to try to achieve a rapprochement with China or with other countries, for that matter, in the context of what's happening in Ukraine, he'll be subject to some domestic criticism that he's kind of going soft at a time when he should be standing up to America's various opponents around the world. So I think it's something that's very desirable, but I think that there are large political obstacles.
Finally, before we go, a question for every one of you. We see when the rest of the world were struggling very hard, China managed in the year 2020, 2021 to maintain its economic growth rate while at the same time fighting off the pandemic temporarily. But now we see like a switch of roles while the rest of the world is trying to loosen the policies that they consider appropriate. China now consideration is pretty much on fighting on the pandemic. How do you see what others have done over the past 2 years could also, in a way, help China to understand better and also be able to search for the right tools and the right space for the policies? Ms. Wang.
Well, we have to realize that every decision comes with a cost. Even for the US and the European economies, they are running their economy now at the cost of more possible deaths due to COVID. And China is trying its best to lower the death rate, trying to protect the people's basic livelihood, but that's running at the cost of economic growth. So we're looking at a situation that would put a lot of weight on the central government. Whatever the decision is, it has to be quick to alleviate the pressure in the economy.
Things that are changing very fast, all right? Professor Powers, very briefly.
Yes, I agree with Wang Dan. I think that there is a trade-off here. I do think that the dynamic zero COVID policy is a very good strategy for the long term. It's done well for the country over the past couple of years. But I think that in terms of tactics, especially at the local level, the implementation needs some improvement in order to help the economy.
Right. Professor Xiao, final words, very briefly. We have 20 seconds left.
Yeah, I think China has been learning. So I think trial by error, So eventually China will actually get over this short-term pandemic problem. Yeah.
Seek truth from facts. Seek truth from practices. That's the policies of China over the past few decades. Hopefully, this time we'll also be able to recover very fast. Thank you so much for all of you joining us, Wang Dan, Xiao Geng, and Michael Powers. Appreciate it. And that's all the time we have for today. If you'd like to know more, search World Insight or check out our YouTube channel. Follow us on Twitter and Facebook. I'm Tian Wei on behalf of the team. Thanks for being with us.